All right, let's talk about the best house in the worst neighborhood, as I like to call AGNC Investment Corp. This is a mortgage REIT. We will talk quickly about what they do. They have some information here on their website, and it's written in super complex English. Don't worry, we will translate it into normal, understandable English. I don't like when they try to make all these fancy loops around what they actually do. Then we will take a look at some performance in terms of dividend and stock price, and we will also take a look at the balance sheet for this company to really drive home the point of why this company is the best house in the worst neighborhood. It's a very risky macro bet. I like to liken this type of investment to buying options, but a little bit less risky. Is this type of investment that you do if you're a bit bored and you've been going on for a very long time. You want to stay consistent with the investment, but sometimes you like to spice things up a little bit. So I decided to put just 2k from my last paycheck into this company, just to spice things up a bit, make a macro bet. It's definitely not something I recommend, but if you've been going at investing for as long as I have, well, sometimes you get a bit bored and you want to spice things up. So I did some research into this company and decided to just make a fun bet. Macro bet. All right, so what does AGNC actually do? Let's read a bit from the website. Let's see how far I get in this one, trying to pronounce all the words, and then I'll just say it in plain English. So AGNC is a leading international managed mortgage REIT that invests predominantly in agency residential mortgage-backed securities, agency MBS, guaranteed by a US government-sponsored enterprise such as Fannie Mae or Freddie Mac, or a US government agency such as Ginnie Mae, on a leveraged basis. We may also invest in other types of mortgaged and mortgage-related securities, such as risk credit transfer securities, non-agency residential and commercial MBS, and other assets related to the housing mortgage or real estate markets that are not guaranteed by a GSE or US government agency. As a leading provider of private capital to the US housing market, we enhance liquidity in the Alright, I can't read this full statement. It goes on, liquidity in the housing market, etc., etc. What AGNC basically does is they buy mortgages, alright? So if you remember movies like The Big Short and the housing crisis back in 2008, well, it was basically these mortgage-backed securities failing with delinquencies and the money not being paid out. And who holds these on the balance sheet? Well, basically in this case, AGNC. So they invest in mortgages, they make money from the interest rate payments coming in from people owning homes. They do not own the properties themselves. They do not add extra value in terms of developing it for special purposes. They do not have a special niche in the, for example, commercial real estate sector that's being hammered, that's undervalued in certain terms. They're just making money from owning these mortgages, from providing money basically. So the lender packages it up into a security, sells it on, AGNC picks it up. We will see this in the balance sheet later on. That's basically what they do. It's a very risky bet. It's a bet on interest rates. It's a bet on that things won't turn worse and that there won't be delinquencies in the mortgage space for private housing in this case. And I think it's a good bet. I think that in this case, I believe that the real estate crisis that we're seeing is mostly focused in the commercial space, and I don't think that it will spill over into the mortgage space for private properties. I could be wrong in that case, but nonetheless, it's a very fun bet on the best property in the worst neighborhood. And I say the best property because they've had some stellar performance starting back in 2008 in the middle of the crisis, spotting an opportunity. And then we can see in terms of dividend history, indeed they've had 2 cuts here from 18 cents on quarterly basis down to 16, so 2 cent cut, and then a 4 cent cut once again and that's what they're currently paying out every quarter. And in terms of actual yield, this is 15 something percent, so quite oversized returns compared to S&P 500. Very risky indeed, and we can see that stock price has gone down in normal market environments. It went up here following 08 when the market stabilized. And in this case, I think that there's a lot of fear in a stock like this. So there's potential to see another increase in share price paired with this nice yield as well. So it's potential to be a double sandwich that will make investors a lot of money, but indeed it's super risky. There's high risk of dividend cuts if bad stuff happens with people not paying back on the mortgages. So it's just a super risky investment. We can take a quick look at the balance sheet as well. So as I talked about in the beginning of the video, we can see here AGNC securities, these packaged mortgages. It's an asset on the balance sheet of AGNC. It's a loan, I know. It makes no sense if you haven't done accounting courses, but in this case, this is something that pays money to AGNC. So just like when we looked at bank stocks, they also have this type of structure to their balance sheet. This loan will show up as an asset here for AGNC. There's always balance. One person's liability is another person's assets, and there's always balance in the books. So we see the mortgage-backed securities here, and then we see repurchase agreements showing up on liabilities. There's a spread, and they're making money in the spread, basically. They're getting paid from these mortgages. And then we also see liabilities here, dividends payable. Indeed, that's that sweet yield slowly taking its toll, slowly draining out the balance sheet in this case. But it's a very nice yield, and you can do whatever you want with it. If you reinvest it into the company, well, then you would have had a fantastic performance. I looked at the website, they did that calculation, and indeed it outperformed the S&P 500 if you calculate with dividends reinvested. But of course, past historical performance is not a guarantee for future returns. We know it's a very risky market that we're entering right now in the property sector, so it doesn't necessarily mean anything, but that's why I like to say that it's the best house in the worst neighborhood. They've had stellar performance in the past, but it's a bad environment right now. So I really hope that that analogy makes sense. This is a fun little bet that I did because I was a bit bored. I might as well have bought cryptocurrency or options. It's in the same category for me, and definitely not something that I would put big bucks on, like for example Porch Group, which is an investment I really believe in. But you know, that's just me covering a risky investment. Hope you enjoyed it. I hope you find this video educational, and as always, hope you guys make a ton of money whatever investments you decide to make. Take care now. Bye bye.